What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 3rd of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to ask a very important question, and that is whether or not we can expect a wave of retail adoption of cryptocurrencies in the coming month or two, or more in the long term towards 2020. I think this is a very important question to ask when we're trying to guesstimate where the market's going or where the current status of the market is, and we're going to be diving into all of that and much more right after our quick sponsor. Our sponsor for this episode is CoinMarketCal.com. Now, for those of you who haven't used this site, CoinMarketCal is a leading economic calendar for reliable upcoming events in the cryptocurrency space on all of your favorite projects. From general announcements to exchange listings to airdrop campaigns and community AMAs and meetups, you can find everything on the platform. And from the proof and source section of each event, you can actually see whether or not the event's true for yourself or take wisdom of the crowd from the upvotes to the downvotes, and even contribute yourself. I really recommend you not only check out the platform, but also check out their newsletter to stay up to date on upcoming events. Alrighty, everyone, so let's go ahead and focus in on this question before we take a quick look at the status of the market at the moment and dive into some of the article pieces that we have for this topic. What is retail adoption in this case? What is this wave that I'm talking about that could be really beneficial for Bitcoin, and as it could be for just about any other market? Well, retail as a term is not in the sense of the term retail that you might think of in the sense of shopping or goods and services, things of that sort. Retail in this case, as a retail investor, is an investor who usually meets under the criteria of an institutional investor, which is someone who's accredited, basically making $250,000 a year or has a net worth of over $1 million. Now, I would even be a little bit more kind of loose in the sense of my definition of retail investor. I would say that a lot of people who meet that category of accredited investors would still fit into what I would define as a retail category. People who aren't institutions, that aren't running investment firms, who aren't family funds or VCs. A very small window of people who could very much lead cryptocurrencies higher. It's just the world we live in. There's a lot of wealth concentrated in a lot of few people in the investment world, due to the fact that they manage a lot of money, and then also they own a lot of money and assets and wealth. But the fact of the matter is that what we're focusing on here is, what could this wave of retail adoption mean for cryptocurrencies? Could it be enough to really push, crypto higher? A few million people in the United States or in people across the world. Could it be enough to spark this next wave? And can we expect it soon? So I know that was a mouthload, guys. I know it was a boatload of stuff I just kind of shot at you. So let's go ahead and let's do a real quick analysis of the market, and we'll go ahead and dive into that throughout the video. So over the last 24 hours, we can see here the cryptocurrency markets are mostly in the green at the moment, with a few exceptions in the red. But most cryptocurrencies, again, are getting outpaced by Bitcoin as we've returned to having Bitcoin up 12% over the last 24 hours. Now, as I mentioned to you all, I had averaged down around 10,150, 180, I think was what I got in. So I'm up about 10% on that so far, which is good to see. I'm happy for that. And again, I would say that when you get those kind of dips, guys, when you get something close to 30%, don't get greedy in this market. It's just that there's a lot of buyers coming in. That's going to be my big point that I drive in. Valuations have risen back up over the last few hours by a good $30 billion. From the lows. We can see here as well, a lot of that is coming from Bitcoin. Altcoins still keeping up, but not as fast. And Bitcoin dominance obviously showing that with a leap up of around 2% here in market dominance. All right, so let's go ahead and talk about this topic here, and I'm going to focus in. I know it's biased to the United States, but there's obviously the same trend showing elsewhere in the world. This is a global revolution, but I think the US is a good test subject, and that is the fact that we are seeing a soaring of awareness of cryptocurrencies yet again. Now, the media isn't really reporting on it. I mean, if you take a look at Google Trends, you can start to see the curve has come backwards towards Bitcoin, as well as Ethereum and other cryptocurrencies alike, just broadly the whole cryptocurrency industry. But we are starting to see a rise back in the popularity of crypto, nowhere near where we were back in December of 2017. So we've got a little bit of a ways to go. But as we get towards the $20,000 mark, it would be likely that we're going to see a lot of the people who were originally interested in crypto, who actually made a move and pulled the trigger on getting their first cryptocurrencies as an investment, or to hodl or whatever it may be, or just at least have some exposure. they're going to be returning back to the scene. And as much as that seemed like a lot of people, that was a fraction of the audience that we're going to be reaching this time around in this cycle. people need to understand the perspective of where we are right now. If we take a look at the chart, what we're at right now is the equivalent of Bitcoin in 2015 and 2016, where we were starting to exit out of the accumulation phase, revisit previous highs, and enter into the true next bull run, where we started to get a 20x multiple from 1,000 Bitcoin to $20,000 Bitcoin. So this time around, we're hopefully, and again in this accumulation phase, rising back up to 20,000. We're about a little over halfway there in the sense of the rise back up to the upside. And now we need to get up to 20,000. Hopefully, have a slight pullback and then start to pull higher towards 50,000, 60,000, 70,000. I have a more conservative price target than most, but some people again have levels of 100,000 to 200,000, 500,000, whatever. I don't know. We'll have to see. It really depends on what pressures come in. But what we can see in the sense of retail audience, there was a recent survey that Coinbase did amongst 2,000 different individuals from, I think it was YouGov that did the actual polling in December of 2018. And this was back, in bear market territory. That's the thing to take into mind here. It was mostly in California, Nevada. I'm assuming a lot of that is coming from Las Vegas, Washington, Florida, New Jersey, Massachusetts, and New York. So these are kind of the places you'd expect. Usually very high tech hubs like Massachusetts and California and New York in the sense of finance. So it makes sense to me, right? But as we go throughout the article, there's a lot of interesting things they dive into outside of just simply talking about where cryptocurrencies are popular. For example, if we go through this here, it says the report claims that more than half of Americans, 58%, now say they've heard of Bitcoin when given a list of cryptocurrencies to choose from. That number, however, dropped to 37% when those surveyed were not prompted with a list, though more than a third of your average Tom, Dick, and Harry's with some knowledge of crypto is arguably still nothing to sneeze at. Okay, that's a very interesting way of putting it. But you get it. They're talking about like your average Joes and stuff, like everyday people, 37% being able to name that they've heard Bitcoin before. And I've seen that before. I've met people. They don't know what Bitcoin is, but they've heard about it. They know that it's something that's out there. It's a really good sign to see that the brand awareness is getting out there for Bitcoin, that Bitcoin doesn't have a marketing budget. That's the crazy thing. And it's been able to just kind of get itself out there through brand awareness by people talking about it and the media covering it. And another piece of data that I really thought was interesting, I think kind of gets to the core of what we need to be concerned about, has to do with the fact that people are very likely to buy crypto, right? This is kind of the ultimate question. In that same survey that was done by Coinbase, they have a really interesting paragraph here that focuses in on whether or not people would be actually willing or looking forward to buying cryptocurrencies. So let's read this. The Northeast, in fact, is where Coinbase identified a large number of average internet users with an above average interest in investing in cryptocurrencies. In New Jersey, close to a quarter of those polled said they were very likely to buy crypto in the next 6 months. And across the U.S. broadly, more than 15% of Americans reported that they were either somewhat likely or very likely to take the plunge into crypto. And as they emphasize in the article, that might not jump out at you as a very big number, 15%. Oh God, that doesn't sound like very much. But there's two things we need to keep in mind. 15% first is a very large number. I mean, we're sitting at less than 1% of global adoption at the moment. And even though we're focusing on the United States, that's a big leap up from where we are now. Because there's really only about, I think some people have much more, the numbers can vary. I would say that it's much more likely that we have about 1 to 4 or 5% of US residents owning some form of cryptocurrency. If we can bump that up to 15%, that's 3 times what we have. And not to mention, this is point number 2, retail investors intending to buy cryptocurrencies at this point, being at 15%, is extremely exciting, because what's going to happen when it actually starts moving? We know that market cycles, as much as I wish it wasn't this way, I always try to tell people early on in cycles, tell my friends and family, get in now, if you actually want to actually consider investing in this technology at all, and don't buy it at a later stage, don't buy the top. We all know that retail investors, for the most part, the gigantic mass wave that's going to come is going to come in at a later stage. So this number, I think, would easily get up to 25-30% in this next cycle. And it's just that we simply don't have those numbers at play yet, because those polled don't know about Bitcoin yet. They haven't seen the price action yet that's about to come. And what we can see now is institutions are betting very heavy. Now, on the term of institution, what I mean is, again, starting to get into that class of investors who are running hedge funds, that are running investment funds, that are investing into cryptocurrencies. And boy, are they taking some serious leverage, making some serious bets on this. They are betting extremely strong on the idea that we are going to have a retail wave coming in. So this is a good example in here. They talk about a company called Babel Finance, or Babel Finance, I don't know how to specifically pronounce it, reportedly carried a balance of 27 million in outstanding loans originally in April, in the sense of betting on cryptocurrency. So they're basically trading on margin. They're trading on borrowed capital in this case. But if we take a look here, just 2 months later from April, when they were recently surveyed, the company now says the balance has ballooned to more than $100 million, bringing its total approximate loans to $124 million since first opening its doors in July of 2018. So again, like most of these institutional funds, they've been coming in and starting to buy up Bitcoin at these levels when the market has been low, and they've started to play a role in this accumulation. And it says, in other words, more than 80% of all the Bitcoin-backed loans that the company has moved in the last year has been executed in just the last 60 days. They understand the 80% retracement has come through, guys. It is not likely we are going to see a revisit on the lows. We are seeing a rapid expansion, much faster than I think people realized. And as we talked about in the data, I mean, you can see, if you take some of the later phases on this chart from the light green to the dark blue here, and you can even consider the yellow area here, which is from 6 to 12 months, this is showing that Bitcoins are being accumulated and people are not letting go. They're being held for longer periods of time. We've entered into the next cycle, folks. Now, to explain what this is, again, for those who might have missed it, I think it was one of our most popular videos that people saw. This is the Bitcoin UTXO, unspent transaction output. UXTO. I always mix up the acronym. The unspent transaction output data chart here that shows us the time length that unspent transaction has been spent. In this case, it's basically has yet to be exhausted. So we can see here that there's been a squeeze, and there's only as of recent been a little bit of a movement here from the 6 month to lower levels in the sense of an increase in the amount of unspent transactions that have been moved in that time period. But you can just see here, I mean, there's just been a huge squeeze here. There's not that much available Bitcoin on the market that's actually circulating, that's actually moving. Most people are holding it. And as you have, this potential retail wave coming up, which we'll get to in a second, the ultimate question of whether or not the retail wave's coming in, we have, for example, Grayscale, who's playing a big role in swallowing up all of the new mined Bitcoin. Now, not all of it, but a good chunk of it. For example, Grayscale's Bitcoin Trust. This is one of the Bitcoin ETNs that are traded on the market that allow you to get some exposure to Bitcoin. It's trading at a massive premium because people are just buying it up like crazy. Has accumulated over 11,000 Bitcoin back in April. And they've continued this trend here, guys, along with not just Grayscale, a lot of different funds out there. And currently only 54,000 Bitcoin are being mined per month. We also have the halving coming up as well. So again, another supply factor that's going to gut the supply. That would basically take this down, instead of 54,000, in this case, if we split that into two different valuations, it'd be 27,000 Bitcoin per month, right? So that's going to be startling. It's going to be a supply shock. That means if Grayscale continues this buying activity, they're not buying up 21%. If they buy up in that range, they're almost buying up half of the mining reward for an entire month. And that's significant. So we can see institutions, they're trying to pick up now. They're trying to prepare to build their, the products as Grayscale is doing for their clients. We know there's other Bitcoin futures that are actually settled that are coming into market as well, ErisX backed as well, that are going to need physically backed Bitcoin. And, as we take this into mind, when can we expect the retail investor wave to come in? Well, I have to say, guys, there's good news to this, and it's that it's not in the short term. Okay, what's going to push price up in the short term is going to be clearly institutions. So again, I'll go ahead and set the auto chart here, just kind of clear it up a little bit. There we go. So we got it straight. What's going to push Bitcoin back to 20,000 over these next few weeks and months is simply going to be one thing, and that's going to be institutions or institutional product makers in this case, who are actually building financial products. Again, Grayscale, ErisX, backed, there's a lot of other companies as well that I bet are feeling confident and close that they're going to have a Bitcoin ETF produced, and they're going to have to start buying up Bitcoins on market or through OTC. Either way, continuing to cut back on the supply, which is going to lead price up to 20,000. And then we can possibly expect a little bit of a pullback. And then after that, similar to what we had last time when we revisited the highs, right? We had the pullback and then the bull run. And that is the retail wave. That's what's going to lead prices higher. So to kind of, just in a very simple nature, show what that's going to look like roughly on the chart, you're going to have the trend backwards up to the relative highs back here in 2017. You're going to probably have a correction back downward towards 13, 14,000, something like that, where we have a nice decent 30 to 40% correction. And then you're going to have the rally upwards towards one of these higher levels. That might be more extended. You might have a few, bumps in the road towards this as you go higher. We don't know how fast this is going to move, and it might even move past the line that I have here in the logarithmic chart. We don't know. But again, somewhere in this ballpark where we're going to be expecting this to 50, 60, 70,000. And if we get an ETF, this thing could go bonkers. It could go up much, much higher than we could expect. But again, it really depends on your expectations, guys. I know everyone has different measurements. Everyone has different tones in understanding how markets, new emerging markets come into fruition. And I think that's a very important thing to take into mind. Some people think that this is going to happen overnight because we live in a generation of short attention span. I'm Gen Z, millennial, whatever you want to call me. I'm on the younger generation of things. I understand that's very true about our generation. We want things to happen overnight. And there's some people as well who might have a very long-term view and think this is going to take 40 or 50 years. And I find myself in kind of a middle area. I think that technology, especially in today's world, moves at an exponential rate. But at the same time, I don't think it's going to happen overnight. This is a emerging multi-trillion-dollar asset class that's going to come into fruition over the next coming cycles, which is going to be over a matter of at least a decade before this becomes well-known, mainstream, and owned by a lot of people. And my whole goal is that in order to really see crypto in the mainstream, I think it's going to be somewhere between 2025 to 2030, in this case, at the earliest that we're going to see this on the mainstream. But could we see a big growth and adoption here in the next year or two? Absolutely. And that's what we're looking forward to in the sense of the investment potential behind Bitcoin, and over time as well, the continued development of the really exciting technology and not only settling transactions, storing value in a censorship resistant nature, but also through movements like the DeFi movement and expanding financial services. All right, guys. I've rambled on enough today. I hope you all are doing well wherever you are, and I'd like to know what you all think about this. When do you expect that retail wave to come? I think we're going to get it, after we get a breakthrough on the highs, which I believe is going to come sometime between the beginning and the end of the fall of 2019. And as we go into the winter of 2019 and into 2020, that's when we kick off the next rally. With this kind of momentum that we have, that's what I personally believe. But I'd like to know what you all think down below in the comments. I'll silence myself. I've spoken into the mic enough for today. But until the next video, thank you all so much for watching. I hope you all are doing great wherever you are, and I'll see you all in the next one. Stay tuned.